Stock Market Morning Prep video for Thursday, May the 1st, first day of the month. We did have some green across the board. Dow Jones up 45, NASDAQ up 11, S&P up 5, and Russell up 6. A bunch of shenanigans going on. We had the Fed come out with their announcement at 2 o'clock, and that's why most pros, they don't even trade Fed. I'm pretty much one of the fans. If you have to, you look for the best setups. If not, just stand aside. Just a total waste of time. We had a bad GDP print. We had some other information coming out as far as economic data, not so great. Fed did exactly what it was supposed to do. No change. And the market ignored totally the GDP and rallied yesterday. Very subdued, very light volume, but nonetheless, it did rally. So where do we go from here, right? Well, the analysis is pointing lower to risk being to the downside. But remember, what our analysis tells us and what price wants to do is a totally different story. So when you're a little confused, maybe just take a step back and reduce your share size. Try to pick the best trade and make a couple bucks for the day. We do have intermarket divergence, and what I mean by that, we have Qs way below the downtrend line. IWMs are really terrible looking chart, and then you have diamonds, which looks fantastic, and then you have the ES at extensions, and then the transports, which is the leader, doing okay. I mean, we rallied for a few days, but that's going to be the deciding factor. Does the transports either sell off or rally and bring everything else up? Well, we're going to be watching what the Qs do today. A lot of the high beta names, growth stocks are still taking it on the chin. Kind of subdued a little bit, but still looking terrible on the chart. So the leaders are still faltering. We have stocks above the 50-day moving average on both indices as the in the ES. In the S&P and the NASDAQ, still trending lower. So what's happening is that our algo and our HFTs are pushing the indexes every which way but up, right? So we're running up, we're running down, all over the map, and then at the end of the day, they push them higher to take them higher. We also had mutual fund inflows coming at the end of the month, so you might get a little follow-through for today. But remember, the most important is the non-farm payrolls numbers that come out tomorrow at 8:30 Eastern Time in the U.S. So that's going to be a big play on what's happening. I do think that you had a real negative print in GDP, which is it's not. Growth is slowing. We haven't had corporate profits in 15 years. There's a lot of negativity out there. Also, on top of that, you're at extensions. I mean, we are at extensions. But remember one thing, this market is highly manipulated, of course, by the Fed, putting money into the markets, and then you have every other commentary telling you got to buy. We have a fairly valued market, so you have to use caution here because at any given moment this market could roll over. So it's best to keep a light book, try to trade the best you can, or if you are into options, obviously trade spreads if you can. You're probably better off doing that than going directional at this time until the market decides that, okay, you know what, we are due for a correction. So we have 3 big days down, we have 4 days up. Down days, then we had another 7 days up. I mean, the market is just all over the map. And if you really look at it, if you're really watching the markets during the day, you notice that stocks are not moving. Only selective stocks that are moving. And, you have a universe of 10,000 stocks. It's very hard to look for one and try to find something that's gonna move in your favor without stopping and just reversing. And that's what's been what's been happening lately, at least the last several weeks. So anyway, keep a light book, be very selective. But here's where, when I mentioned that we had intermarket divergence, I'm going to go into the indexes right now. And again, it's just going to be an index day today, what we're going to show you. But we have the Japanese yen, and as you know, the spot now, not the dollar yen, the spot. If the yen goes up, we have risk off, right? So we have an ascending triangle. We do have a lot of overhead resistance with the 200-day just above this fib cluster. But if you looked at it, we called a nice inverted head and shoulders, which is a bullish pattern for the yen, spot yen, bearish for equities. And this right shoulder is holding nicely here. And we were up yesterday in an up market. Now, sometimes that is going to happen, but it's just something is not right here. And when something is not right, we have to take a step back and try to, if at all possible, try to minimize your trading until it gets right again, right? Until it looks easy. Well, this isn't easy when you have inverted head and shoulders, two bullish patterns, and we're starting to break up to the upside. Now, the most important is the bonds, right? We have identified also an inverted head and shoulders on bonds. And we have this slanted neckline, and we're above the neckline, and bonds didn't go anywhere yesterday while stocks were rallying. This, to me, tells me that I think, and bonds, as I always mention, is the smartest asset class in the room, right? You know, bond guys are the smartest guys in the room. And I think that it's just a matter of time before the bonds start to break out here, and then we start moving. And when that happens, the money's going to rotate out of equities into bonds. Now, that's the big kahuna. This is the big the elephant in the room. I want you to watch what bonds do, because that's going to really be a telltale sign here of what equities are going to do going forward. Okay, so now let's take a look at the indexes here. ES, we're back at extensions. We have 7 days up, straight up, not one down day, 2 days down, 3 days back up again. So I have no idea why. It's just absolutely insane how the markets they just could care less. They buy every dip. And we have a fairly valued market. There's no edge here at all. It's just incredible how they continue to buy the dip. And again, being short for a hedge is one thing, but being short the market as a whole, maybe for an area, it's just not giving it to you. I mean, it's just not there. We have 2 days down, 2 days up, 2 days down, 7 days up, 2 days down again, and 3 days up. Probably going to be 4, maybe 5. And if we take out this extension, the 1272, we are going to head to 1918 as the 1618. So, you know, it is what it is, and we have to take a step back here and play the best setups you possibly can until the market can really correct. But we are at these extensions, and it's a scary market right now. Here's the 1 hour chart, you know, breaking down from a bearish rising wedge. We sold off hard for 1 day, not even giving you an entry, rallied back up, and now we're back up at these extensions again. So again, guys, definitely a word of caution. Dow Jones, which is not a leader, is doing the best out of all 5 indices that we follow. And we have minimum, okay volume. So, you know, I wouldn't take the Q off for the Dow, but listen, anything could happen in this crazy market. Take a look at the transports. Now, the transports still in this uptrend channel, right, doing okay, but we had this sell-off. Remember I mentioned that, you know, every time it made a high, we sold off, and we did. And now we made this decent move, but look at what's happening. No volume. There's absolutely no volume here to confirm the move here. So to me, I think that anything can switch on a dime, and that's why I'm using caution here. Look at the Russell, another one of our leaders. Obviously taken to the woodshed, barely made it to the 200, sold off, and bounced back up again. So we are below 2 trend lines, and we are way below this downtrend line up here, and we're moving averages, have bearish configuration, and we also have bearish price pattern, lower lows and lower highs here. So one of our leaders really testing the 200. Now, again, anything could change, but if you go by the analysis and it tells you, hey, look, you know, we're looking for lower lows and lower highs, you know, that's something that we really need to be careful about. Now, Q, same thing, right? We have bearish price pattern, bearish price, lower lows, lower highs, and now bearish patterns now, bear flag, bear flag, bear flag. This is going to be the area right here. This previous swing high, this 88.21, is really where we're going to need to take this out to alleviate any downside pressure. If we take this out on a closing basis, I would not be looking to short Qs. I think a short in the Qs right now needs a trigger. And that might be a good area to look to short. Look at the volume, is dismal. I mean, there is absolutely no volume here. However, the market continues to go higher. Remember, price is what pays us, okay? Lastly is the euro dollar, guys, just to show you what the euro dollar is doing. Now, that is, let me see here. Oh, all right. Okay, here we go. Little problem with the computer. Anyway, euro dollar is starting to break out higher. We did have a breakdown in the dollar. And remember, when you have a breakdown in the dollar, it's gonna affect a lot of the commodity block currencies and commodities. So watch what it does, because there is going to be a decent trade in gold and in oil. So I'll be watching closely. As you know, oil took a nice step took a nice breather and actually sold off pretty hard here, back below 100 again, all right, and down 54 cents today. We did have some crude oil inventories, which would show a bigger build. So I do like energy, though. I mean, the energy play continues to work. Watch the energy sector. I do like it. I also like alternative energy as some of the solar names as well. But I'm not showing them to you right now because there's really nothing working at the moment except some of the energy plays, but they're extended. There's a lot on my watch list, and I'm just waiting for this market to give us an opportunity to start really getting a little bit aggressive here. But right now, you can't get aggressive in this marketplace. Just keep that in mind. Remember, guys, non-farm payroll numbers come out tomorrow, so keep a light book here. And going into the numbers at 8:30. All right. Have a great day, and we'll speak to you tomorrow. Take care.